This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global oil demand is expected to reach pre-pandemic levels by early next year as the economy recovers. Although spare refining capacity could weigh on the outlook, producers and traders said at an industry conference on Monday. The outlook is in line with a bullish forecast from the Organization of the Petroleum Exporting Countries, OPEC, but ahead of estimates from the International Energy Agency, IEA. Global demand is seen rising to 100 million barrels per day, BPD, by end 2021 or in the first quarter of 2022, Hess Corp President Greg Hill said.
Gas station pumps ran dry in British cities on Monday and vendors rationed sales as a shortage of truckers strained supply chains to breaking point. A post-Brexit shortage of lorry drivers as the COVID-19 pandemic eases has sown chaos through British supply chains in everything from food to fuel, raising the spectre of disruptions and price rises in the run-up to Christmas. Drivers queued for hours to fill their cars at petrol stations that were still selling fuel, albeit often rationed. There were also calls for National Health Service, NHS, staff and other emergency workers to be given priority.
Moving on to the top news in the energy sector.
Top African oil exporters Nigeria and Angola will struggle to boost output to their OPEC quota levels until at least next year as underinvestment and nagging maintenance problems continue to hobble output, sources at their respective oil firms warn. Their battle mirrors that of several other members of the OPEC Plus group who curbed production in the past year to support prices when COVID-19 hit demand, but are now failing to ramp up output to meet soaring global fuel needs as economies recover. The Organization of the Petroleum Exporting Countries and its allies, OPEC Plus, agreed in July to add 400,000 barrels per day, BPD, to production from August until December 2021, slowly phasing out the unprecedented supply cuts.
Widening power shortages in China have halted production at numerous factories including many supplying Apple and Tesla, while some shops in the Northeast operated by candlelight and malls shut early as the economic toll of the squeeze mounted. China is in the grip of a power crunch as a shortage of coal supplies, toughening emission standards and strong demand from manufacturers and industry have pushed coal prices to record highs and triggered widespread curbs on usage. Rationing has been implemented during peak hours in many parts of northeastern China since last week, and residents of cities including Changchun said cuts were occurring sooner and lasting for longer, state media reported. Next, we have the top news in metal markets. Prices of industrial metals came under pressure on Monday as worries about demand in top consumer China, where a power crunch and rationing is shutting factories, triggered selling. The biggest loser was tin, which last week hit a record high at $36,830 a ton on the London Metal Exchange, a gain of 75% since January. Prices of the soldering metal were down 4.2% at $35,000 a ton at 16:06 GMT. The power issue acts as a double-edged sword, hitting smelter production and leading to reduced supply, said ING analyst Wenyu Yao. This is positive for metals prices. However, it is also affecting semi-fabricating and downstream consumers, which is negative for prices.
China will auction another 150,000 tons of industrial metals from state stockpiles on October 9, the National Food and Strategic Reserves Administration said on Monday, as it continues with a rare release of inventories aimed at cooling high prices. In the fourth round of metal auctions this year, the administration will sell off 30,000 tons of copper, 50,000 tons of zinc and 70,000 tons of aluminium on online platforms operated by Norinco and China Minmetals Corp. The volumes match those in the last auctions on September 1 and will bring the total amount of metal released in 2021 to 570,000 tons. Prior to this year, Beijing had not sold off state metal reserves for more than a decade.
We will now look at the top news in the agricultural sector.
India's biggest sugar-producing state, Uttar Pradesh, has raised the price mills must pay for the new crop by 7.9%, the top official said, announcing the first hike in the cane price in 4 years ahead of state assembly elections next year. The state government has decided to raise the price that mills need to pay cane growers in the 2021-22 season beginning October to 340 rupees per 100 kgs, $4.61 per 220 pounds, Uttar Pradesh Chief Minister Yogi Adityanath said, addressing a group of farmers. After raising the cane prices by 3.3% to 315 rupees per 100 kgs in the 2017-2018 season, Uttar Pradesh kept the rate unchanged, stoking anger among millions of farmers, an influential voting bloc. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.